Good afternoon, everyone. London Property Podcast is back, 2021. And we've got a new co-host here. Obviously, you probably recognize Chris and myself from the previous episodes, but now we've got Jaffa here who is going to introduce himself. He's going to bring a very different angle to the podcast, very useful, I think, for a lot of people. So Jaffa, why don't you introduce yourself?
Thanks a lot. My name is Jaffa Nazare. I'm a director at the Collaborative London, and we're specialists in residential property development. We have got a unique business model, which is trying to put the investors first. We give them full security by registering the property in their name. At the same time, we don't charge any fees, and we profit share with them on exit. So that's in a nutshell.
Brilliant. Yeah, so Jaffa's obviously got that experience as a developer, refurbishing projects, working with investors from all across the world, which is obviously super important. And then obviously Chris and I have been working in prime central London. We know the market, and we'll give you kind of, the pulse of prime central London, what's been happening, which leads me on to what has been happening. I mean, the last podcast we did was back in November. A lot of things have changed. We've got a vaccine, which is people are getting jabbed quite a good rate in the UK, which is super positive. And I mean, the big news this week was the kind of rumor and the articles in the press about the stamp duty holiday being extended up until June, right?
Yes.
It's not confirmed yet, and obviously the Chancellor is not going to do anything until the budget, which is on Wednesday, so another week's time, 3rd of March. Probably by the time this is out on all the channels, the news would have broken that it's either going to be extended or partly extended for people who are under contract or who are already in the process of buying a property. But we'll know more in a week's time. Obviously, for first-time buyers buying up to £500,000, that is big news because it impacts twofold. Sure. If you're selling a property, you're going to get more buyers through the door, motivated buyers, now that we've got this announcement. And second of all, if you are actually trading up more or less within the same price range, you're going to benefit from that savings. So it's positive, but it's not confirmed yet. It probably will be by the time this is online. So what do you guys think in terms of obviously this news? It was kind of expected in a way, right?
I think it was kind of expected. I think we all knew it was going to happen, but I didn't want to tell any of my clients that it was going to happen until we kind of got the news. But I think in terms of first-time buyers, I completely agree with you. It does make a difference. I think, Chris, do you remember on that W2 property, it was really important for him to get completion in before the stamp duty change. So
completing, good that it's exchanged already. Because going right up to the date, people thinking that it's going to come in, there's a lot of pressure to kind of make sure that it's going to happen. Speculated it's going to be an 8-week increase, which is, I think, is the right thing, because it's not too long enough for other people to come in, but it kind of makes sure there's not a cliff edge, so all the deals that are currently under offer have a chance to go through. So I think it's great. You were just chatting to me before, Jaffa, about some figures of how the transactional levels have massively increased from what it was like this time last year.
I mean, HMRC have reported that there has been 98,830 housing transactions completed in January, and that's 21% higher than the average for the same month over the past 5 years. So even on the ground, I think we're all feeling the same.
Absolutely. I mean, Chris, what have you been experiencing in the last 3 months?
In terms of turnover, in terms of number of doors open and people out viewing, for us being in prime central, it's still relatively quite slow, but I would say the quality of the people that are coming out pretty good. So I think the offer ratio to viewing is extremely high. I think that's quite good for clients who don't want lots of people going around the property in COVID, because government guidance is, if you put a property on the market these days, you've got to offer a video tour first, which now they're so good it's almost like a first viewing.
Correct.
So it's almost like we're doing second viewings with people now. So it kind of feels less busy, but there's a lot of online activity from people kind of looking. And in terms of the number of transactions going ahead, we just agreed 2 last week. We just completed on one. I just handed the keys over this morning for another. It's busy. It's pretty good, pretty positive. And this is before all of the positive news about
vaccines
coming through. So I think going into the summer, it's pretty
People looking positive. I think that's key.
Yeah.
I think the rollout of the vaccine and us being ahead of everybody else in terms of that rollout, or like you call it, the jab rate,
high. Yeah.
is very high.
It's good.
So
it instills confidence in people. Sorry to interrupt, but it's going to help the international markets. So prime central London, obviously. What you've had a lot of demand from domestic buyers, and a lot of the research that if you look at there's been more domestic buyers buying in prime central London because you didn't have the competition from the international buyers. As soon as obviously travel restrictions are eased, there will be a big kind of amount of people from overseas coming into prime central again, which will boost things.
I mean, I've felt it myself. I mean, a lot of my clients are overseas based, and they're all about, as soon as I'm able to come, I want to be buying something. I want to kind of start investing. I want to move my money along, and the fact that the pound is also going up is also causing them more pressure motivation to kind of move their money and kind of do a transaction. So I think that combined with the confidence are two big factors.
Yeah, and you've got to ask yourself the question: why is the pound going up?
Yeah.
And one thing I wanted to point out was, if you look online, there's quite a lot of, I know Rishi Sunak, he put a post out the other day, and I was just kind of scrolling through all the comments, and everyone was trolling the guy completely. And to be fair, I think he's done a reasonably good job in the circumstances. But I don't think he really gets that much credit for it.
Totally.
If we look at it from an international perspective, instead of like people in the UK looking at our own government, if I look at it from what, for example, an Indian client said to me the other day, he thought it was brilliant the way that we were dealing with or our government were dealing with the process. You deal with quite a lot of international investors. How are they kind of seeing how the UK are dealing with the?
So I get a lot of phone calls from our clients, and when I was telling them, look, with regards to the situation on furlough or the grants or the exemptions that we were getting, or based on the COVID restrictions, they were shocked because they don't have a furlough situation, or
they don't even know what furlough means.
Exactly, they don't even know what furlough means. So I think I agree with you. I think Sunak's done really, really well. I think this has been a really tough time for everybody, and the fact that we've gone into 3 lockdowns, it hasn't been easy. But the reality is, I think we have set the trend for everybody else to look in and say, look, wow, we've coped with it quite well.
Yeah, and one thing that I want to point out, if you remember the podcast we were doing. As we were literally in the first lockdown, if you remember March, April, June, July, we were getting quite a lot of comments, and it's quite interesting to look back on those things, because remember we were saying, there's not going to be a massive, that we had people saying that the property market is going to go 20% down, and there was no logic, there was nothing behind that. It was just people negative talk in the market. And what happened last year in 2020 just proved how resilient, especially in London, but generally speaking, the housing market, it went up on average. Obviously, there are parts of the country which were massively stimulated by the stamp duty holiday in a way that some people are actually paying more for the property than they should have, and the saving that they were getting from the stamp duty was kind of being, taken away by the fact that they were overpaying. But that's a different matter. But what happened last year was so important, because now we've got vaccinations happening at an incredible rate in the UK. 2021 is going to be a great year, and 2020 was a really good year. I remember looking at some of the research that Savills did, and there were 21% more inquiries in 2020 than there were in 2019. So it was a better year, right? Generally speaking. And that was supposed to be, for a lot of people, that, I'll hold off and buy because the market's got to crash. And what happened? It was the complete opposite. So 2021 is going to be, we've got a lot of positives in the market. And what we're saying to people, both buyers and sellers, is don't wait. You're not going to get a better deal. The property that you're looking at today will be gone by tomorrow. And we've seen that on the ground, Chris. You guys as well. Every week, last 4 weeks we've agreed 7-8 sales. It's just incredible, and obviously it's going to get better. And if you look at some of the research, it's going to be a year in 3 parts. Obviously the stamp duty changes that kind of potential cliff edge scenario, but I think it's going to be an incredible year. We're going to be very busy, especially after summer and autumn are going to be insane. I really believe that.
I was going to ask, how are you guys finding because I from my side, I found that since COVID, you've really filtered out the clients who are knowledgeable, educated, and know the market from the ones who are just maybe riding a wave.
Yeah.
And I just wondering, from your perspective, have you noticed that your offers, that the people who are offering are now have a longer term view, or you're getting only the serious buyers through the door? How are you finding that? Has the people who are offering, has that changed at all?
Chris, and
I would say the people that we're finding out there's quite a lot of property developers in the market, obviously out there looking for a good deal. They're always out there anyway, but they come out in force, when times are perceived to be,
that's exactly
not as much competition, particularly in Kensington, Chelsea, Westminster areas, because no overseas, or not many overseas people are here at all. So that part of the market, lots of property developers. But at the same time, if it's a best-in-class property, they're still going at relatively strong prices. We've just agreed, the ones on the Hyde Park estate, those two, they've gone for pretty much as high as they would have at the peak of the market, and they are kind of best-in-class properties. So I'd say best-in-class, property developers are also looking, and I would also say the flat market has definitely been more affected than the house market. I think there's a big distinguishing factor there. In the Hyde Park estate, we don't normally sell that many houses, but what we have done is we've branched out this year. We have sold houses down in Barnes, houses in Richmond. We just agreed a house in Marylebone. So I think the house market is definitely definitely a thing. Huge blocks of hundreds and hundreds of flats with no outside space, with really high service charges, have tended to struggle a little bit more.
Yeah, absolutely.
For various reasons, but all in all, it's quite good. But I think when the international, one client said to me yesterday, Chris, a lot of my friends are booking flights to come to the UK now. The market's going to be booming as of September. This guy owns a lot of property, very successful businessman, and the guy I'm pretty sure is right.
We've got the fundamentals for it to be, like I said, just looking at what happened last year and what uncertainty we had. We didn't have a clue what was happening in March, April. There was so much, we had a few deals fall through, etc. But then again, if you reflect on it, it was still, a good year, and given the context.
Are you finding a lot of competition for unmodernised properties? Because, if that's the thing...
That's the thing we're looking for, isn't it? Yeah.
So you put a couple under offer in the past few days. Yes. Much competition or not?
To be honest, not that much.
I think that's it, isn't it?
Yeah.
Domestic market want good quality. Thing,
to be able to secure a property that we know, it just needs
the margins in
there.
The
margins in there. That's how it is.
Yeah. It's a good market to trade in, I think, at the moment.
I think I was just picking up on what Marius was saying in terms of the fundamentals. For us, we, if it wasn't for COVID, obviously we can't ignore COVID, but if it wasn't for COVID, we were doing very well, leading up to it. But then, once that, hopefully we've got the jab rate up, like you keep saying.
Once we've got coin that.
Exactly.
The jab rate. I'm sure Boris would love to steal that.
Title that our new podcast.
You'll hear in the news conference in 2 weeks' time. Used by Boris. I'll have to get royalties for that. But
So I think once most of the population is vaccinated, I do think the fundamentals are there for a very good property market. I really do.
I think a lot of it. Some people have been adversely affected. But some people have actually not been affected at all. I think you've got a lot of kind of people still working in the city who are still on full employment, working from home, but they haven't been spending as much. So I know there was some research that Experian did, and it showed the saving rate has gone through the roof. There's a small amount of people who are unemployed. Unemployment rate's gone up slightly, but at the end of the day, 95% employment. And a lot of those people aren't spending as much. I know I'm not spending as much. So I think people's capability of actually being able to buy is going up the longer this kind of goes on for.
Correct.
Those are some of the things that I think people don't really factor in a lot of the time.
They're definitely a lot more motivated buyers, very focused as well. There's people I think there was an interesting bit of research that came out last week. And they were saying, I think it was Knight Frank, I'm not sure, I need to double check, but they were saying that number of people who offered on something and got an offer, went under offer, and buyers after first viewing increased dramatically. So that shows you the buyers are being a lot more focused because they're not doing 5 viewings to take a decision. They've seen something, they like it, boom, they're ready to pull the trigger, with finances in place, solicitors in place, you know, very, very like active buyers. They're not sitting there, you know, messing around. So yeah, the fundamentals are there. It's going to be a great year. I'm really, really pumped for 2021. Like I said, just looking at what happened last year, and it was still a really good year. And yeah, on that note, I guess, you know, there'll be a lot of news for us to talk about. We're going to do this on a monthly basis, just because being busy and having a, you know, popping property market is good, but it keeps us busy. And obviously, I think doing it monthly, there'll be more news for us to talk about. Yeah, obviously having Jaffa here to bring that kind of developer / investor side is super important. Obviously we deal with investors and developers all the time, but also end users, but then you can have that kind of bring a different angle to the conversation, which I think a lot of people will find valuable. Was there any other news that we missed? I guess it's been quite unstructured, but I think it's nice to ease our way back.
Dominated by the stamp duty and pending, you know, the budget next week. Maybe we should do another podcast, you know, after the budget.
I think so.
Because we don't want to speculate on what's happening there, but I think there's going to be quite a lot to talk about from next week onwards. Hopefully all relatively quite positive.
Absolutely, yeah, definitely positive. So we look forward to seeing you in probably about 2 weeks' time, something like that, in this new format, which again will just add so much more value, because at the end of the day, when we started this and you obviously bought into that idea, it was about us providing value and having a kind of a market commentary. Yes, we're talking about prime London here. Obviously, you know, the housing market is so big, and even within London you've got so many micro markets, so things are different. But we, in terms of prime central London, we've got that experience, that knowledge, which I'm sure some people will find valuable. So we look forward to getting these out there, and you know, if we can help, if anything, would love to hear your feedback, any comments, any kind of how we can improve, or you want to talk about a particular topic, or, you know, we'll be happy to look at it. And I guess that's it, and we'll see you guys in about 2 weeks' time.
Look forward to it.
It's been a pleasure. All right, guys, take care. Bye.